Good morning, good afternoon, good evening, ladies and gentlemen. Let me welcome you to the Digital Nordic and Benelux FP&A board. My name is Olga Rudakova. I'm a FP&A professional, data visualization trainer, and FP&A trends ambassador. I will be happy to be a facilitator for this event. Our topic for today is planning for the unknown. Why integrated financial planning and analysis is the key. And this topic has attracted way over 200 registrations from 33 different countries. The majority is obviously from Nordic and Benelux region, 62%. Most of the audience, 47%, are senior finance professionals, and another 40% are mid-level management, so quite senior audience today. Let me walk you through what's going to happen. First of all, let me start with events that happened in Nordic and Benelux before. You see quite a broad spectrum of topics. Certainly worth watching them, and certainly it's worth being here today. What we can expect. In our agenda, we're going to speak about integrated financial planning and analysis. We're going to learn why FP&A needs to think more continuous, connected, and complete. Bringing strategy to the point of impact, we will speak about FP&A as a driver for vertical integration. We'll speak about technology and how we can make integration possible. We'll certainly have conclusions and recommendations for the event. And we will have a Q&A session at the very end to answer most of your questions, hopefully all of your questions today. And now it is my pleasure and honor to introduce our panelists for the day. Please, dear speakers, join me here on the webcam. Put your microphones on. And let me start introduction with Michael Harthwaite. Michael is a thought leader in the area of strategic planning. He has over 20 years of experience, and he is multiple speaker with FP&A trends. Michael, we are very happy that you could join us today.
Thanks, Olga. Great to be here.
And we are happy to have you here. Let me move on and introduce our second speaker, Evgeny Polonsky. Evgeny is a global FP&A director at Leica Microsystems. Evgeny is a strategic finance leader with track record of driving sustainable, profitable growth. He leads financial transformation towards digital age. Evgeny, we are glad that you could join us today.
I'm very happy to be here. Thank you for inviting me.
And let me introduce our third speaker for the event, Chris Stiebel. Chris is a regional director for Nordic at Benelux. Chris is a FP&A professional with over 10 years of experience. He has experience in areas of accounting, group consolidation, financial databases, and systems. And he's multiple speaker with FP&A trends as well. Chris, we are happy to have you with us.
Thank you. Pleasure and an honor to be amongst the panel today.
And we are glad that you could have joined. Let's move on, and let me tell you a bit about FP&A Trends Group. FP&A Trends is not only international FP&A board as you know it, but it offers numerous resources in area of education, online educational resources, webinars, and workshops. And as well, it is a strategic advisory and research group. So be sure you explore different activities we do. What we can expect today at the Digital FP&A board. It is 90-minute webinar. We expect your active participation in 4 different polls on the webinar subject. We have prepared interactive Q&A session, so please don't hesitate to ask your questions through the Q&A box. You can start right now. Certainly, you're encouraged to connect with our speakers through LinkedIn, and presentation for the event is already available in the handouts section of the webinar. You will receive the recording and copy of this presentation as well within 1 day. after the meeting. One more thing. Before you leave the webinar in 90 minutes, please don't forget to leave short feedback to us. It is extremely important for us to make these events better and better. Let me move on and thank our sponsor for the event, JDocs. It's a modern enterprise performance management. It's the smartest platform for planning, reporting, and analysis. Thank you, JDocs, for making these events possible. Now, and we are ready to start with the topic. I want to tell you a bit about how I see what's happening today in organizations, what I usually see. What's happening? We commonly have 3 different plans. We have strategic plan prepared by executives or for executives. We have financial plan prepared by us, by FP&A, where we summarize most of financial metrics, where we have complete P&L as an outcome. And we have tactical plans. We actually have plans prepared by different functions in organizations. We have logistics plan, operational plan, marketing plan, and many others. All these plans, strategic, financial, tactical, are prepared by different people. They use different language, and more importantly, they use different set of assumptions. These plans don't talk to each other, as we often don't. We work in silos. And today we are going to speak about how to break out of those silos, how to start working together. And integrated FP&A is a solution. We'll speak about how to harmonize our planning process and bring together strategic, financial, and tactical plans. Before we do that, let me ask you, my dear audience, let me ask you a warming up question. And the question will be, actually look inside of your organizations, kind of sneak peek. And the question is, let me start it. The question is annual budgeting exercise, in your opinion, a good investment of your team's time? One option is, we don't budget. Or yes, the time is worth it. Oh, yes, but it should take less time. And last one, no, it is a waste of time. Let's see, what do you think? Do you think that annual budgeting exercise is a good investment of your team's time? No, we don't budget. Yes, and time is worth it. Yes, but it should take less time. And no, it is complete waste of time. Most of you have voted. Let me close the poll and share the results with you. And we see that, yes, 73% of you believe, yes, it is valuable, but it should take less time. And another 22%, quite a significant portion of the participants, believe that yes, and time is worth it. I'm really happy that we have these 22% of participants. Today we are going to speak how to make our budgets and plans not only more effective in terms of speed, but more valuable in terms of accuracy and actual value to the business. Let's see how we can make that. And let me invite our participants, our panelists, for a short warming up discussion before we jump into presentations. And the warming up discussion is about how do you see the ideal split of a FP&A team time between planning and analysis. And let me start with you, Chris. What do you think? What is the ideal split?
Thanks, Olga. And it's a good question, but it maybe depends a bit on definitions and context. If I read between the lines here, and I think planning is more just the manual exercise of creating budgets and forecasts and analysis in terms of the actual value added creating, you know, insights for the organization, then I would say that, especially in terms of just creating forecasts, with the modern innovation with rolling forecasts, automated forecasts, driver-based forecasts, we should be spending less and less time on these sort of arduous manual tasks of just creating a forecast or just creating a budget, and more time driving value, more time in analysis, and also as part of that planning for, say, driver-based planning, scenario planning, what-if analysis. So it's difficult to say exactly which, but less and less time of just planning and more analysis.
Right. Thank you for your perspective, Chris. Michael, what do you think? What is the ideal split between planning and analysis?
Yeah, it's a great question. I think Chris did a great job answering it. You know, I always look at the split between creating value and just buying, and I feel like, you know, we want to spend as much time as we can, obviously, creating value. And I think that's where we can push the analysis further, is in creating value for our company, whether that be shareholder value or whether we're working with our partners, business partners. So definitely, I think the shift to more analysis is where we're headed. And I think, you know, going through today, I think we'll do a good job of explaining how we can get less time actually planning, which hopefully then frees up more time for analysis.
That sounds like a plan. Thank you, Michael, for this answer. Evgeny, what do you think? What is the ideal split between planning and analysis?
I could not agree more with Michael and Chris. I think we need to spend as much time as possible on value-added analysis. Now, if we do planning, that should be actually action planning that we drive through which we drive the value with our business partners, and not the planning of the P&L statement, which can very well be automated.
Thank you. Thank you. I really like all the answers. It gives us perspective of the question via FP&A function. So let's see how we can split our time, bringing more value to organization. And actually, to answer this question, we'll start going in topics prepared by panelists, and we will start with you, Michael. Michael Hathwaite will be speaking about why FP&A needs to think more connected, complete, and continuous. Michael, the stage is yours.
Great, thanks, Olga. Great job. So today I want to talk about just three simple things. So that's the 3 pillars of modern integrated FP&A. And I think you can achieve those by the 3 C's. So it's being more connected, more complete, and more continuous. So I'll go into this in detail here, but I just want to give a little upfront talk here. So when we talk about connected, it's more optimized planning capabilities by integrating planning techniques. So a lot of times we think about that when we think about planning, we think about integrating the different systems. We're also going to talk about being more complete. So that's really taking what I would call more of a cash flow mindset. So we need to stop kind of hiding behind ratios and subtotals and take this more holistic view of things. We'll talk about that as well. And then finally, we'll end up with this concept of being just more continuous. So sort of, I don't want to say throw away the calendars, but get a little further away from, you know, the annual AOP process, the annual strategic process, the quarterly reforecasting process. Put down the calendars and try to take a more continuous approach to planning. So those are the 3 pillars I want to talk about. So let's dive in to the connected concept here. Okay, so everyone sort of has a baseline on the kind of financial planning realm. In fact, everyone does it from what I just saw a second ago. Not everyone does it well. So when we talk about financial planning, you know, a good financial plan is about budgets and forecasts. It's also about having good driver-based logic in the system. So not everyone's there yet, but obviously driver-based is critical for being a little bit more agile, whether you're doing a rolling forecast, a ZBB implementation, whatever the case may be, driver-based is obviously going to be very beneficial. I also think this is really an opportunity for newer technologies such as things like AI to come in and really help be more efficient in the planning process. But this is just one layer of financial planning in the modern world. So what we need to do is really marry that then with a more strategic layer. And the strategic layer just sits on top and adds another ring to that. So what we're looking at here is not just being driver-based, but being a driver-based financial model. So we're talking about a full integrated income statement, balance sheet, cash flow model where you can screen for opportunities and threats. A lot of the time you're screening for opportunities and threats, it doesn't mean you're running a scenario. You're just evaluating new ideas, looking for opportunities to break a bottleneck, create an opportunity. So a lot of that stuff, you're looking at, you're gonna, essentially throw away or shelf, but eventually you come up with some ideas that you say, hey, look, let's bring this to our leadership. Let's try to influence and set targets and push that down. That snakes back around into the budgeting process and starts that figure 8 loop. So that in itself is good, connected financial, good planning. But there's another ring that we need to add that's even less talked about. So you really can't have strategy unless you also have the tactical ability to execute on that strategy. So having that tactical ring at the bottom, where it's really more, it's not driver-based modeling, it's not modeling, it's more initiative-based. So you're looking at hundreds and thousands of initiatives. These are tactical initiatives which you are going to try to action through a series of stage gates or like a pipeline. So it starts off very early stage. Here's an idea. We're going to go do this. And it moves through the stage gates until it gets action. So some examples there, the classic sales, marketing campaign, initiative, some strategy execution through kind of an initiative-based tactical approach. IT projects are a great one there. So it's a great way to get very granular and tactical on the things you're trying to achieve, so you can hit your financial targets in your 1-year basis, but then you can also set your strategic targets high up. So that sort of snowman diagram is really important when we think about connected planning. But I want to shift now to another pillar, which is the more complete concept. So I tried to draw a diagram here. Not sure I was super successful on this one. But it's just thinking of being a bit more complete. So we all know we have drivers on the left, and then that kind of produces output going across. And that could be across the income statement, balance sheet, cash flow. But what happens is along the way, we get really focused on ratios and subtotals. So we say, oh, I want to grow sales. That's my #1 focus. And that's not a bad idea to have that as a KPI or a subtotal. But the problem comes in when you try to maximize it, right? So it's kind of like this notion of I can just take that conveyor belt and like make it go a little faster. The problem is when you do that, is it just jumps down to the next conveyor belt in the system, and that conveyor belt's a little slower or really slow, or it gets jammed up. And so it's really about trying to measure all the way through the system. So this is really just a concept of like a manufacturing plant where you're just trying to get throughput out the system. And throughput is really from the initial drivers all the way out to cash being generated for the business. So it's having that complete view of the world and not just focusing on profit or a key ratio. Those things are what we would call in the manufacturing world local efficiencies, and things just jam up further down the road. So you need to have that kind of holistic approach. It's about throughput. That's what creates value, and that's what's really important. And when we talk about that throughput at the end, what's coming out the other end, you can classify it how you want, but in the end of the day, it's just sources of cash and uses of cash. Am I generating cash in some places? Am I spending cash in other places? So if we go to the next slide, we're actually going to take that concept of sources and uses of cash, or inflows and outflows, and we're going to look at it on more of a continuous landscape. So you can see here, when you do that, you end up in many cases with a curve. And in fact, in every case, any good business follows this exact same curve. So you have to have what I would call a beginning and an end to every plan you do. And I think if you hone in and find the right level of detail, you can find that beginning and end of every plan. So really what that is just a life cycle approach. So it starts off with making a key investment, right? Analyzing the market, realizing where there's a bottleneck in the market. If you were to remove that bottleneck and create a new opportunity for your organization to enter into, what would that look like? And when you have that mindset, which is a bit more of a strategic mindset, but when you have that mindset, everything follows this path. It's called, it's like the yellow brick road I like to talk about it. Everything follows that path, it starts off with initial investments until you solve the problem, and then you start to see some traction, and that traction grows. You create opportunities, you keep competitors out, you ride that as long as you can, it becomes a cash cow, and then eventually gravity kicks in and it starts to decline. And that's really the best way to look at it. But when you take that approach, it's best to go, and I'm jumping to the second slide, or the second graph on the right, take more of a portfolio view. A lot of times we get very focused in our analytics in doing consolidation. When you consolidate businesses or strategic business units that are in different life cycles, you start to get a lot of averages, right? And you look at things like ROI and you say, oh, it's a local efficiency, but you look at it and say, oh, my ROI went down. But that's not necessarily a bad thing, because it just means you might be investing more in early stage opportunities, which are going to have an investment without the return. So it's better to break it out, not focus so much on the consolidation, and really look at it like a portfolio and see how many strategic business units do I really have, where do they sit on the curve, and how can I maintain a really healthy portfolio as I move through. And I think if you take those three approaches, I think you're going to be spot on in kind of modern FP&A. So Olga, I'll pass it back to you for next step.
Thank you so much, Michael. Thank you for your insight and for bringing keywords for FP&A to our slides and to our summary. So it's connected, complete, and continuous. Thank you for giving that. And it's time to move on to some practical implementation of this integration in practice. But before we do that, before we give the word to Evgeny, I want to encourage you to ask questions. If you already have questions to Michael, don't hesitate to put them into our question box. If you have questions to other speakers, you still can put them into the question box right away. And I will ask you a question as well. Let me start another polling question. And I want to ask you about the level of your integration in your organization. So the question is, how would you describe the level of your FP&A integration? Planning processes are not integrated. That's an option. Integration or planning processes are integrated between finance and tactical level. Planning processes are integrated between financial and strategy level, or fully integrated planning processes. Let's see where you stand, where your organization stands. So how would you describe the level of your FP&A integration? Not integrated. Integration between financial and tactical level. Integration between financial and strategy level, or financial processes are fully integrated. Most of you have already voted. So let me close the poll. And I can't wait to see the results. All right, so we have majority of participants, 36%, saying there is integration between financial and tactical level. But quite comparable percentage, 24, see integration between financial and strategy level. 27% confess that processes are not integrated yet, and 13% mention that financial processes are fully integrated. Michael, I'm very curious to know your opinion. What do you think about these results? Is it something that you have expected?
You know, it's funny because it's actually a little different than I expected. I would have thought it would have been more financial and strategy integration. But having kind of sat back and thought about that, I think it's interesting too. If your focus is more on the planning side, I would guess that your integration between financial and strategy is probably a bit stronger, just because you're focusing on your strategy to drive your targets for your financial plan. And so that might be the focus point that you have. But I think if you're more of an organization that's more on the analytics side and driving more kind of dashboards and so forth, you might be more financial and tactical focused. So I wonder, you know, back to that first question we had when we talked about planning versus analysis, I wonder if that's impacted or influenced by sort of where people think on that spectrum. So I think it's interesting, but I also think it's very interesting to note that, as you said, it is pretty split across these three. Fully integrated, obviously, being the lower one there, but obviously that's the toughest place to be. So definitely congratulate a lot of people for being fully integrated.
Great. Let us move on. And actually, by the way, it's 13%. I think that's an amazing number to celebrate. I personally expect this one to be lower. So, and let's move on to the connected discussion. So we see that where the processes are more integrated, finance and tactical or finance and strategy. Let me ask you, my dear panelists, what do you think is easier to integrate, finance and tactics or finance and strategy, and why? And let me start this time with you, Evgeny. What do you think?
Sure, and I think it really depends. It depends, first of all, on the level of integration that you have between your operational systems, your ERP system, and financial planning systems that you have. And secondly, if you look at the strategic side, it of course depends on the level of maturity of our FP&A talent and how well they are connected to the strategic thinking.
Good. Thank you for your opinion. And let me move on to you, Chris. What do you think? What is easier to integrate, finance and tactics or finance and strategy?
Thanks, Olga. And I tend to agree with the poll results, actually, because as mentioned, the tactical is more detailed and it's breaking down to these initiatives, as Michael alluded to earlier, whereas the long-term planning, the strategic planning, in my experience, has traditionally been done at a very high level. So we lose sight of sort of this initiative-based planning. Often actuals and budgets are just used as a baseline, and then we apply some rate of change or percentage of growth for the future. Also something Michael alluded to earlier. And then it makes this type of a plan, the gap to integrate that becomes much larger as we lose track of this tangibleness, so to speak.
Right. Oh, that's very interesting thinking, like why it can be happening. I wonder, Michael, if you have something to add. What do you think? What is easier to integrate?
Yeah, I think the answers have been great. So I'm going to change the question slightly, and I'm going to say, where can you add the most value? And I think, and I'm a bit biased here because I've spent a lot of time in this space, but I think integrating finance and strategy, if you're looking for a place to start, you're looking to get some traction, I think you can build strategy quicker, faster, easier, cheaper. And I think the potential, if you do it right, of course, is that there's a ton of value locked up in that process. The challenge is not everyone gets to do that really, really well and really, really impactful. So it's really about rolling out that strategy in a way that's meaningful and value add.
Indeed, that's certainly true. And let's move on and see what was easier to integrate for our next speaker, for Evgeny Polonsky. Evgeny will be speaking about bringing strategy to the point of impact. FP&A is a driver of vertical integration. Evgeny, this stage is yours.
Thank you, Olga. And we are all really familiar with this classical financial planning cycle that you see on this page. Every year in the summer, we use a format of profit and loss account statement, and we prepare a 3 or 5 year strategic plan. Right? In September, we usually sit down and translate that into the calendar year budget for the following year. And then we kind of flesh out the details of that plan to produce monthly P&L and cost center cards in the forecasts. And when actuals come in, we would reconcile them to the bottom-up forecast, to the latest forecast that we had. Right? So many of you will know that this process oftentimes results in a little bit of vicious cycle. We have an optimistic hockey stick in our strategic assumptions or in our budgeting assumptions, and then we get a little bit surprised when this optimism does not translate into the actuals. And then we kind of try to recover the lack of growth behind our assumptions by cost-saving measures, really, which are never beneficial for organization. So now we're all aware of examples how the world has changed over the last couple of years. And for all those of us who prepare calendarized budgets, which is the majority of us, let us just think back to what we planned 2021 to be in the beginning of that year and where last year ended on those parameters. And then we're just 2.5 months into 2022. And let us try to tie any of our macro budgeting assumptions to the current reality. And I'm sure it will be very difficult for the majority of us. Now, with this volatile environment, many of us are coming to a conclusion that a little bit more of a continuous loop and connection between strategy and operational parameters is a better solution. So on the next slide, you will see how in my company, we translated this insight into the concept of strategic dashboards. So we started developing this kind of top-down framework, which consists of 2 simple pages. One simple page is a strategic growth map, which has maximum 2 dimensions and identifies maybe customer segments and intersections with product segments in which we want to generate the majority of our growth. And then we develop an investment map, which indicates where we want to invest along those same dimensions as those dimensions on the growth map. Now, once these 2 maps are established, we would bring in the key functional stakeholders to agree how these strategic dimensions would translate into their functional priorities. And then we would develop what we call the functional dashboards. And each of the functional dashboards is, again, a maximum of 2-dimensional table, which is focused on key operational KPIs, which are under the control of the respective function. And we run this set of dashboards, this integrated set of dashboards, as a rolling forward-looking process. And we validate the dimensions of those dashboards once in a while. Now, what this once in a while means, it really depends on the parameters which are in the specific dashboard. And that could be, based on our experience, anywhere between 3 months and 2 years to redefine, to revisit the parameters. Now, on the next slide, we will see that, of course, FP&A plays a key role in this process. Now, FP&A team drives really the discussion to define the dimensions of the strategy map with optimized ROI on the resources, on the investments. And then we ensure that the functional dashboards are aligned to those strategic dimensions. And we do lead the regular reviews. And those reviews are structured as strategy councils, where we discuss, let's say, the top-down picture, and the separate functional reviews for every specific function. Now, finally, we ensure that there is a constant feedback loop and action planning to cascade, of course, top-down into the organizations, the changes of strategic dimensions, and also bottom-up feed of the executional implications from functional reviews back into strategy. So in our organization, and bear in mind that we are innovation-driven B2B business and we sell essentially high-end microscopes, the focus is on workforce planning with the human resources team, project planning with research and development community. We focus on commercial funnel building with our sales team, and the supply chain sustainability with operations. Right? Of course, these dimensions can be different for other types of organizations. Now, if we move to the next slide, and this is where the increased volatility comes into play, which we're all witnessing. And scenario planning is of course, becoming much more important component to make this exercise more meaningful. So while it is really important to focus on simple 2 dimensions in the strategic discussions and in the connected functional discussions, it is also imperative to define the risk profiles as a kind of a 3rd dimension, and to define the scenario parameters to make the exercise successful beyond the horizon of just several weeks. Right? This is where we are all currently learning to leverage the artificial intelligence. So it will always remain important to involve our human brains and intellect in defining the framework and key volatility dimensions. However, the artificial intelligence can really help us in defining the borders of the scenarios and in establishing the interdependencies and driving also the dashboards to the lower levels of the organization. And by this, I mean, for example, producing the daily kind of regional daily sales reporting and against related targets, and also the cost center planning. And with this, if we move to our last slide, we get to the lessons learned. So to make the vertical integration successful, we should just keep it integrated, agile, and simple. So let us not get obsessed with the P&L format, but rather focus on KPIs, which can be understood and actioned not only by finance, but on the same language between finance and operational counterparts. We do need to maintain the strategic discussion ongoing and to avoid it morphing into once in a year summertime exercise. While the regular monthly meetings and forums are usually efficient for business partnering, we should also be ready to action on so-called black swan events in a matter of hours rather than months. And finally, we just need to ensure that our strategic discussions are based on information which can be comprehended on a simple piece of paper with 2 dimensions rather than a 10 megabyte database. Thank you very much.
And thank you very much, Evgeny, for bringing in another set of keywords for integrated FP&A. It's integrated, agile, and simple. I personally really enjoy the simplicity aspect, being simple, short, 1 page. I think that it's reasonably new concept to integrated FP&A. If you have questions to Evgeny, it's really the right time to ask them through our Q&A box. If you have questions to any other speakers, it is still the right time to ask them through Q&A box. And we are moving on. Let me ask you a question. Polling question number 3. I'm very curious, what do you think? What is the main barrier on your way to integrated FP&A? So what is this main barrier? Is it a lack of knowledge about the subject? Or it can be a lack of skills? Or it can be lack of support from other parts of the business? Or it is systems and processes maybe missing, maybe not sufficient. So let's see what you see in the organizations as a main barrier towards integrated FP&A. Lack of knowledge about the subject, about integrated FP&A as such, lack of skills, lack of support, or systems and processes. I can't wait to hear your answers, to see your answers. Let me close the poll and let me share results with all of you. Oh, let's see, 74% of you tell us that systems and processes are the main barrier. Another 17% have mentioned that lack of support from other parts of the business is a main problem. Another 7% say that lack of knowledge about the subject and certainly is decreasing with this webinar going on. And 2% mentioned lack of skills in FP&A. Evgeny, I'm really curious to see your opinion. Is it something that you have expected in this poll?
Well, I was actually expecting to see a little bit more obstacles being seen on the support from other parts of the business, but really great to see that this is not an issue in majority of the organization. So, and also, it's really good to see that lack of skills in FP&A is not an issue at all, because I would just think with the current war for talent, we are always facing situations where our people are good, but we just don't have enough people to cover the entire scope of integrated business partnering. So yeah, I really like this result.
Oh, me as well, because basically it looks like the only barrier to the integrated FP&A, the main barrier is indeed systems and processes. And we will discuss how to solve it in the very next presentation. But before we go there, let me ask all our panelists another short question. So please join me here on the camera, and I really want to ask you, is integrated FP&A for everyone? Our company should meet certain criteria before it embarks on the journey. And let me start here with you, Michael. What do you think?
Yeah, and I love that polling question. I hate to go back to it, but I thought that was a great polling question. Very interesting to see. I think, is FP&A for everyone? I think for sure. I think it's absolutely for everybody. I think it is a journey though. So I think where you get started isn't always the same. I don't think it always has to be the same, like start and end as far as how your journey goes in FP&A. I don't think everyone will know everything on day one, right? You just have to go in and, want to learn, want to create value, and then over time build the traction to be able to implement everything or to fulfill everything. So I absolutely think it's for everybody. I don't think people should take shortcuts. I don't think people should say, you know what, let's get rid of that budget. Let's never do that again. I think it's about taking that more integrated approach, doing everything, but doing it smart in a way that's going to be effective and efficient and value. And I think I'll just go back to the previous question. If you can tell that value and you can kind of build the processes around that, that builds the business case for the technology. I don't think the technology is ever going to be the leader in that. I think it's going to be your ability to get vision for that strategy, for that journey, and I think that's where it needs to start. So absolutely, I think it's for everybody. I don't think it looks the same for everybody.
Really, really nice answer, and you are building this bridge to technology. So I'm certainly going to pass the word to Chris and see what do you think. Is integrated FP&A for everyone?
Thanks, Olga. Allow me to answer the question by a use case. If I'm a self-employed consultant, for example, and I'm making the budget for my company, then in essence, I'm doing integrated planning because the entire business is planning for the future. So I think to answer the question, I think the entire organization need to be involved in the planning process and planning their part of the business. And to me, that's what integrated planning is.
That's really nice and clear answer. And let me bring it back to you, Evgeny. What do you think? Is integrated FP&A for everyone or not?
Sure, FP&A must be integrated. Integrations where we add value, right? But I would just emphasize, in addition to what Michael and Chris said, that the integration should not start, in my view, with the systems integration, but first it should start with integration of our thinking between the functions, making sure we're on the same page in terms of the business model understanding and the framework in which we are going to integrate our thinking. And then once we're aligned on this framework, and maybe we can write it down on a piece of paper, then we can and test it. Then we can think how to implement a system solution to make it more structured from process perspective.
Right, I really like this perspective, and I really like how you brought in this thinking integration, basically integration of mindset. And certainly that's true. If we are not at the same page, we cannot possibly move on in this journey of FP&A integration. Thank you for all your answers. If you want to ask questions to our speakers, that's a good time to do so. And meanwhile, we will move on to our third presentation of the day. Chris Stiebel will be speaking about technology and making integration possible. Chris, the stage is yours.
Thank you, Olga. And as if anyone who's actually paying attention, you might have seen there was a discrepancy between my title on this slide and then the first slide in the presentation. Olga also mentioned that I've been speaking on several different events. So my role has recently changed within Jetix, but I worked with Jetix within the Nordics for the last 2.5 years. Prior to Jetix, I have over 10 years of experience within finance. So a lot of hands-on experience and knowledge within finance processes, a lot of planning and budget cycles, as well as a lot of different systems and tools, which led me to Jetix. But allow me to start my presentation with a quote. The value created in making a budget doesn't necessarily lie in its outcome, but rather in the process of connected thinking and collaboration that went into making it in the first place. So the organization working together as a whole to make a single combined output. So true integrated FP&A. I think that's where the value in creating a budget lies for me. Moving on my next slide, I have the luxury of being the final presentation today, so I'll do my best at trying to tie all of this together. To start by defining and explaining integration. What do we mean by integration of FP&A and what's important about it? So it's not only about integrating systems, processes, departments and functions across the organization, but it's about facilitating and enabling cross-departmental, cross-organizational collaboration and integrated thinking and planning. So really working together as an organization. It's also very closely linked to transitioning the role of finance from traditional FP&A, where we work with numbers and spreadsheets. You know, everyone comes to us when they have an Excel question, for example, to becoming experts, giving advanced insights and information, as well as providing the tools necessary for the business to be empowered to fully own their own planning, reporting, and follow-up, something that I like to call FP&A as a service. On my next slide, I'll dive into the role that technology plays in making all of this possible. In the diagram presented here, I realize it's a lot of stuff, but anyhow, in the top left of the diagram, I show management and HR as, you know, being fully integrated support functions across the organization, whereas finance is still a silo in this picture. In my experience, HR and management are traditionally the functions that have succeeded the best because management and HR processes are well embedded into the organization. They're well embedded into our everyday tasks and processes for the most part. But again, finance or FP&A is still very often working in a silo, so to speak, as well as many of the other functions in the organization. And why is this? Systems have historically been one of the biggest causes why organizations and departments actually work in silos. And what do I mean by that? Systems and system landscapes are very fragmented. Systems are standalone and they're not integrated with one another. The systems don't speak to each other, and this has been and is still in many cases a huge barrier for many organizations. For example, sales are working in a CRM system, SCM working in ERP or perhaps a warehouse management system or both, and then operations, you know, different depending on which industry you're in, but might be working in a project management system, a pricing tool, or often, you know, some combination of different tools that are also disconnected. While we as finance or FP&A are given this hefty task of somehow integrating all of these in like a manual way, for example, Excel. So we as finance are the storytellers of the KPIs and the financial performance across the organization, and we are also the owners of integrating FP&A. So therefore, historically, having been the one most involved in integrating all of this and being the storytellers, we also have the largest interaction and footprint with a lot of these different systems and data sources. Again, often it's still done, sadly, by exporting all of this to Excel, making some kind of, you know, Excel magic to put all this data together. Perhaps if we're lucky, we have some kind of a BI tool to do visualization and data discovery from some of the data sources. But however, if we move to the 2B, the after, with modern technology, there are better options than Excel only. Most systems have become more modern, more flexible, and in general are much more capable of integrating with other tools and systems and apps. But in many industries, replacing source systems like ERP or something else isn't necessarily the best step to take either. Say, for example, the ERP is a huge project. Our ERP is very tailored to our organization. Our processes are built around them. But there are other technologies like data lakes, data warehouses, and enterprise performance management, which can also solve this issue. With data lakes and data warehouses, on the one hand, we can store the data. We can add some kind of queries, SQL, commands, algorithms to consolidate data from different data sources. So we can read the data and we can store it in a central place. Then with the application of BI, we can read that data. But then, of course, the planning and budgeting is still done somewhere else, oftentimes again, Excel or some other tool. And on the other hand, with enterprise performance management systems, by introducing this, we can integrate all of this data using a single system. The EPM systems have their own ETL capabilities, meaning that they can connect to these external data sources, they can read the data, they can transform it and write it into a central database somewhere where we all have access to it. So not only are we pulling in the actuals and consolidating all of this data in a user interface with low or no coding so that it can be owned by the finance department, on top of that, EPM also allows us to plan and forecast using all of these actuals, utilizing also in terms of technology and innovation, a lot of modern things like AI. It allows us to create driver-based plannings, scenario analyses, and other advanced modeling techniques, which allow us to create a lot of efficiencies in our day-to-day tasks and the way that we work. EPM is the tool that can be fully owned by finance, for example, as I mentioned before, low or no coding. And then in turn utilized by the entire organization as one tool in their toolbox in terms of FP&A as a service. And this is enabling the organization to create a single source of truth for the historical, the tactical, and the strategic level of information that we've been talking about all day. So this is where all P&L owners should be working on a daily or weekly basis. This is part of a solid XP&A strategy, and in my opinion, one of the most efficient ways to integrate finance across the entire organizations. So to wrap all of this up on this page, systems and modern innovation are a key enabler in integration, but it's important to remember one caveat. It's not a solution in itself. It's not only by introducing an EPM system that we solve all of our problems, but it's the combination of the correct application of tech. It's also including the right people at the right level in the organization. It's all built on top of a good, solid data strategy as a foundation, and also instilling or creating the right organizational mindset or culture, as was mentioned earlier as well, which is all go hand in hand in terms of integrating FP&A across the organization. Moving on to my final slide, I would just wrap up by adding some of the benefits of being fully integrated utilizing a technology like EPM. So creating collaborative and integrating planning at fingertips, faster and more accurate planning cycles, more and more automation, which results in a reduction of the manual inputs, while also reducing the inherent risks of error in these manual tasks. We can also increase the depth of detail or granularity, which is reached with very little or no impact at all on the efficiency, which enables us to broaden the scope of our planning efforts. You know, we can plan at a much lower level on a product SKU level, for example, without impacting the overall time it takes us to do this planning. We can also run real-time scenarios, what-if analyses, and other types of plans by first identifying drivers and then modeling those drivers so that we can manipulate them and find their correlation to inputs and outputs on the organization. So in conclusion, if there's anything that I'd like you to take away from this presentation, modern technology is a key enabler, and it can help you to become more integrated faster. And settling for outdated systems and processes and long manual Excel exercises, this should not be acceptable. It's neither going to keep your company competitive in today's competitive market landscape, nor is it going to keep you as an individual competitive against your peers who are also sharpening this skill set on a daily basis. That wraps up my presentation. I'd like to thank you all for listening and hand it back over to you, Olga, to continue.
Thank you. Thank you so much, Chris, for bringing in technology aspect, for telling us that technology certainly is a key enabler, but not the solution in itself. I really, really like this phrase, something I will take away myself. And in the previous polling question, we have established that technology is one of the main barriers on the way to integrated FP&A. And I'm really curious to see what you, my dear audience, have to say about a technology implementation. So I really want to, again, have a look inside of your organizations and see whether you're planning to introduce any EPM system. So let me ask you this question. Are you planning to introduce an EPM, Enterprise Performance Management System, for integrated planning? I already have one. That could be an option. Yes, planning to do it this year. Thinking about it, or not planning anything. Really curious to see the answers. Where do we stand in terms of implementing modern technology? Are you planning to introduce EPM for integrated planning? I already have one. Yes, planning to introduce it this year. Thinking about it, or not planning anything? Most of you have voted. So let me close this poll and share the results with you. Quite interesting results, I think. We see 43% thinking about it. Maybe you have started thinking about it after Chris's presentation. 28% already have one. 25 not planning anything, and 5 yes, planning to introduce it this year. Chris, I want to know, what do you think about the results? Is it something that you expected, something that you face every day?
Yeah, thanks, Olga. I pretty much agree with the results here. This is quite in line with what I've seen in the past. There are a lot of organizations who have started implementing EPM. I'm surprised to see that there aren't so many planning to introduce this year, but with regards to what's happened around the world within the last couple of years, there are a lot of projects which have been put on hold. And so it's good to see that there's almost half of everyone who are at least thinking about it or considering it. But shocking to see that a quarter of organizations are not planning anything at all. So hopefully today's presentations will help to sway them up at least one category.
Right. That's quite an optimistic outlook. Let us move on, and let me result and move on in our mini discussion. So please join me here again for a short discussion between all of us. And we have mentioned that technology is certainly an enabler, but it's not the solution in itself. Let's speak about what else we need here. And the question is, what should go first? Cultural change or technology adoption? And why? And let me start with you, Evgeny, here. What do you think? What should go first?
Sure, and definitely cultural change should go first, because we need to know where we want to get before we start putting it into the process, guardrails, and adopting the technology.
Right. Michael, what do you think? What's your opinion?
Yeah, I agree with Evgeny. You generally want to say that you want to, start with the culture and know where you want to go. I think technology typically kind of crystallizes kind of your cultural thinking, so I think that's really strong. But I do think the process can be a bit iterative in that they can pull on each other. So you can start with the cultural change, and then as you start to move towards adopting new technologies, I think that can strengthen things and actually even help further as you go through. So I definitely would say, hey, first steps, in my opinion, would be on the cultural side, but I wouldn't necessarily park the technology until the very end, because I think that it can act as a driver, and pull you along a little bit further. It can obviously crystallize your thinking, but I think to some degree it can also shape it as well. So, you know, I think you want to kind of keep them side by side, but I agree with Evgeny. I think starting culturally, I think is probably the first place, but I wouldn't do it. I wouldn't do it in a silo.
Right, right. Okay, back to you, Chris. What do you think? What should go first, culture or technology?
I have so many comments and thoughts and questions to this. I'm going to try and summarize in a very, very short period of time, so I won't go into everything. But I really do see these things as being linked, but also very independent. I think you can do both. But in terms of if I have to choose one, cultural change doesn't cost anything, and it tends to typically take much longer, especially in large organizations. So definitely cultural change is something that we can start today. It doesn't really cost us a lot of money per se. It does take time and effort, so there is a cost involved. But technology and the adoption there, as Michael mentioned, could also be something that helps us. It works as an accelerator. So I definitely think that if I had to choose one, I would say cultural, because the return on investment takes a long time, but it's hard to choose just one.
Right, right. But you don't really have to choose one, right?
Mm.
Very good. I think that we have reached the point where we can all look at the complete picture of keywords, key elements we discussed today during the webinar. Please stay with us with your cameras on. I think that it's moment when we can discuss your key takeaways. So tell us in 1 or 2 sentences, what was the main idea from the whole event for you? Let me start with you, Michael. What was the main idea, key takeaway for you from this event?
Yeah, obviously we're looking at several words here. I think all these words are great words. I think you can kind of sum things up in these words. Certainly the ones that I addressed, the continuous, connected, and complete, I think are very valid. But I think the undertone, the things we didn't talk about, is that integrated financial planning is a value creation exercise. So it's about keying into that value and the value you're going to create for the organization, whether that be some words about integrated, collaborative.
Right.
It's about identifying and recognizing the value, but then I think it is a bit about that journey about how you're going to do it, and I think that's the traction story. So how are you going to build traction? We looked at one of the polls, which was, oh, we don't have people, we don't have the processes and technology in place. So it's about what do you do, how do you engage in that process to start to build traction and consensus. And I think we didn't specifically call any of those out, but I think that's the value prop, that's the journey you're on, and hopefully you can tell that story, because I definitely think the value's there, and I think traction can follow right behind.
Right. Evgeny, what is your key takeaway from the event?
I think Michael actually nailed it down quite well. One thing that I would add is really this whole tension between where do we need to start? Do we start with cultural change? Do we start with the systems? And of course, every organization requires a very thoughtful approach to how we face this change and how we approach the integration, right? And then the whole uncertainty piece and how we integrate the uncertainty into the cross-functional business partnering is another big question that we can take away today.
Right. Chris, back to you. What do you think is a key takeaway from today's session?
Thank you, Olga. I think Michael presented some very solid theoretical advice for everyone, and you, Evgeny, as well, with some real practical examples of why integration is important and what kind of value it creates for the organization. So I think we're all in consensus that integrated planning, integrating FP&A across the organization, it is very important and it does add a lot of value. I think many of us are still in a position of, okay, how do we get started? There are a lot of people who are far ahead of the curve. There are a lot of organizations who have started it. This isn't necessarily a brand new concept. So a lot of organizations have started this journey. They're far along the journey. They're pioneers in this field. Look to your peers, look to the market, see what other people are doing. Start there. Again, there is no overnight easy solution. It's a lot of different factors. It's not just technology, it's not just people, it's the combination of everything. So, you know, work as an organization to come up with a plan, look to market and peers to see what others are doing, how you can benefit from, you know, gaining some low-hanging fruit, but get started today.
Right, and I think that it's really motivational call to action at the conclusion. That's important to start. It's important to start somewhere, maybe less important where exactly to start. And it brings us to our Q&A session. We have received enormous amounts of questions today. Many of them are addressed directly to some of you, many are general. So let me start with the questions. I hope that we managed to answer most of them during the session. If not, no worries, we will answer them in writing after the webinar. Michael, and my first question will be to you. And so the question from the audience is, where do you put steering the business in planning and analysis, or it is not covered in this framework? It's important, otherwise it remains a theoretical exercise. So where do you put steering the business?
Yeah, I think that's a great question. You know, I go back to some of the frameworks that I talked about. I really think you need to start at the beginning, right? So it's kind of cliche, right? But I think take your business, break it down into its strategic business units. You know, obviously that's an exercise in itself. But what is the origin story of those strategic business units? Meaning, what was the unlock that created the value? What's the, you know, it connects to the mission statement, it connects to so many things within the organization. But what was that unlock that created that opportunity for you to really drive that business? And get back to that, and then steer the business on that life cycle approach. So that is the magic yellow brick road. That is the gravity that businesses follow, right? I've said it in a previous presentation, if you're selling lemonade or lemons on the side of the road, right? There's not a lot of upfront investment. You're not creating really an unlock. You're not really doing anything unique, right? Your life cycle curve is pretty flat, pretty not much there. And you know, some businesses can operate like that. You can get caught just sort of chasing somebody else's strategy, or you know, not really having something to fall behind. So I think when you take that approach and really figure out, you know, what is really unique about my business, what's really driving it, what was that unlock, I think everything else falls in after that. So, you know, how do you address your competition? You know, when do you know, what do you reinvest in? Do you know, do product extensions versus reinvest in new ideas? How many new ideas are you looking at? I think it's fundamental. I even think how you look at FP&A and how you manage the business, right? If you're a later stage FP&A person looking at strategic business units that are later stage, you might be interested in ratios like ROI and net income. But if you're more growth stage, right, it's a totally different ballgame. So you can have different, even the mentality of the people that are working in FP&A can be different based on, you know, where your strategy is within the life cycle. So I think it's pretty profound. I know it can sound theoretical, but I think it is the ultimate way to steer the business.
Right. Right. Thank you, Michael, for your reply. And the next question is addressed directly to you, Evgeny. So apparently your theory, and you're speaking about different levels of these dashboards, attracted lots of attention. And one of the question is, what are the KPIs you use in your commercial dashboard and operational dashboard in your company? Thank you. So some of practical examples of KPIs you use there.
Well, sure. And I cannot give the specific details because, of course, they are confidential to our organization. But in the commercial dashboard, we are looking at the funnel creation usually, and we try to focus to kind of narrow it down to specific segments where we want to grow. And we're looking at the funnel conversion and the critical resourcing that we need to generate essentially the sales from the funnel conversion. But from operational side, and this is where it is currently a little bit in a lot of movement, just because of the supply chain issues which many organizations are having. And we kind of shifted a little bit from, say, manufacturing efficiencies into the how do we control the commodity inflation, and sometimes it's not only about inflation, but how do we get the materials that we need, without which, like microchips and things, without which you cannot make the end product. So do we have materials available, and if not, how do we steer the rest of the organization, including the commercial team, to just shift to selling products which we can produce, or maybe adjust our pricing elasticities to make sure that the demand is balanced with the supply.
Right. These are all good examples of really bottom-up information. So getting operational KPIs and incorporating them through this same vertical of plans. Thank you for your answer, Evgeny. And let me move on to you, Chris. A question addressed directly to you, really specific, relates to systems. So data lakes and data warehouses surely can be done. But can we bring unstructured data as well to any of these tools before creating dashboards in BI? So the question is about bringing in unstructured data.
Yeah, exactly. And to bring in unstructured data, then basically you need some kind of an ETL tool. An ETL tool, ETL is short for extract, transform, and load. And that's the basic process of connecting to a source system, whether it be in the cloud or on-premise, or a file server, or even an Excel workbook for that matter. So you can connect to that, you can create a connection, you can then pick up any data, you can define in the query exactly what data it is you want to pick up, how often you want to pick it up, etc. And then you have a transform process, which means you can basically do anything that you want with the data in terms of mapping it to a desired format. So it could be renaming some of the members, it could be also, changing the date format. There's a lot of different things that you can do with this transformation functionality, and then loading it to the desired workspace. So with an ETL tool, so for example, EPM, some EPM tools have a built-in ETL tool, some use an external ETL tool, and it's the same with data lakes and stuff like that as well. So if you want to pick it up somewhere, transform it, if you have an advanced, data team who can do these SQL queries and also do this ETL process in the actual queries themselves, then it's possible as well. So absolutely, it's possible.
Yes. Okay, thank you. Thank you for this answer. And let me move to you, Michael, again. Question related to overall framework. We speak a lot about support from other functions of the business for integrated FP&A. So the question is, how exactly should functions other than finance be involved in the planning process? What should be considered their responsibility?
Yeah, when I think about that, right, where my mind goes is when I think about like the modern technology that's available today, just the ability to have separate cubes that can extend out, right, to handle different functions within the business, but yet integrate that into one single FP&A, ecosystem. I think that's been a huge unlock. I think we've pushed to more financial partnership across the business, but I think between that on the process side, the people side, and the new capabilities of some of our EPM technologies that are coming out, I think that's allowed for that horizontal integration. And I spoke a lot about vertical integration, but I think the ability to go horizontally across function, but again, to the point we've all been making, not have a siloed impact to that is just amazing. And sometimes people, when we talk about that matrix, and I'll just kind of switch gears a little bit, sometimes people say, well, shouldn't we start with strategy, financial, and then operations? Operations to me is one of those functions. So, whether it's marketing, operations, finance, those are all where we need to be better integrated from an FP&A perspective. And I think we're at a really interesting time both from, you know, the processes and people, the business partnering, but then just where technology is enabling us, that, you know, you go back 5-10 years ago, it was really difficult. You know, you'd be in multiple separate cubes that weren't integrated, and you know, almost very difficult, right? It would have been just FP&A. So a lot of opportunity there, and I'm excited to see kind of where that goes.
Right. Okay, I really like how our questions steer our discussion. And you know what's happening next? Very technology question addressed directly to you, Evgeny. So let's see how you can deal with it. Evgeny mentioned AI, artificial intelligence, in the presentation. When do you think it is feasible to use AI for integrated FP&A? And what does it mean for finance people?
Well, you should start using artificial intelligence, in my opinion, when you have a very well-established base case, I would say. So you should have this whole mindset, how you translate the strategy into the functional priorities, and how you manage the feedback loop of the functional priorities back into strategy. You should model it and from technological side as well on the base case, just with one scenario. And then once this is running, pretty quickly after you see it running, you can start thinking about the artificial intelligence as a means of scenario planning and driving the actions between volatility and those scenarios back into the business. What was the second part of the question? What it means for the finance function?
Yeah, what it means for finance people. We can interpret it in different ways, maybe in terms of skills or in terms of do they keep their job. So what actually these AI means for finance team as such?
Well, it is a very good question, because I think as we talk about maybe digitalization in general and artificial intelligence and robotic process automation and other topics that fall into it, I think we are kind of, I think, a little bit, sometimes two different tracks that FP&A talents can develop. One is more going to strategy, maybe potentially developing into cross-functional role where just focus on the strategy and let's say something that you can write down on a piece of paper and drive cross-functional collaboration against these simple criteria. And then the second type of maybe even career track is more technological track, really, where you think how do you drive digitalization into finance once the process and the key framework and the process is established. How do you drive it into the technological landscape, and how do you drive it into the systems and processes which need to be designed and managed, right? So I think you have to usually have types of people, two different types of people. Some people want to go more into this strategic area, which is more cross-functional, and they will perhaps not always end up long-term in the career in the finance. But then people who are more in the finance and more process-oriented, they usually end up growing their careers in this technological area, and also driving the digitalization ultimately in finance.
Right. Maybe it's good time for us to pick our direction already, to see where I want to develop this technology coming in a faster and faster pace. And moving on to you, Chris, let me ask you again, very technological question. I feel that all technology people here in the room feel your connection to you, so they ask you quite specific questions. So Chris, do you know anyone that uses low code like Power Platform for self-service without using CPM and EPM? So in other words, build the model from the ground up without paying large initial cost. Microphone, you're on mute.
Thank you. There was some background noise, so I muted myself earlier. Apologies. Yes, it's a good question. Off the top of my head, I'm not sure if I fully understand the question, but can we have self-service integrated planning without using EPM, if I understand the question correctly? And I think the answer is, yeah, sure. But I think that the at a cost of efficiency, because without the EPM, sure, you can do lots of data discovery, visualizations, and other stuff with the BI tools that you have. You can use the Power Platform to connect to your ERP system, for example, where a lot of useful information you can visualize. You can do data discovery, so you can do a lot of things in terms of data discovery. But the problem is, once you want to do write back, when you want to do the planning, when you want to do driver-based planning, you want to do rolling forecasts, you want to do this strategic planning into the future, then you need to do this somewhere else. Power Platform doesn't give you the capability to write back anywhere. So you're going to need to do that either with some kind of coding in terms of SQL queries, other things, or offline in Excel. Can you do it in Excel? Yes, you can. So the answer to the question is, yeah, of course you can, but at the cost of efficiency.
Right. Thank you for this perspective. And let's take one last round of questions. Out of many, it's really hard to choose, but let me address this one to you, Michael. I believe that anything that was said is correct, but whereas scenario thinking and understanding and spotting new trends such as pandemic, war, energy crudes, and new competitors, new innovations from others, how does this get to be a part of the planning?
Yeah, I think it's critical, right? There's always going to be black swans out there. These are the things that you're not anticipating coming. So kind of dovetailing on a little bit the question with Evgeny, I think we don't want to rely completely on like artificial intelligence to try to drive that strategy, right? Because the kryptonite of AI, if you will, is black swans, right? There is no data that's pointing to that event, and therefore it can't optimize on that, right? It has to be the human mind first and foremost. So I'll even stretch that out a little bit further. Sometimes AI and strategy get kind of used together. I actually would separate those out. I think AI in my mind is much more of an efficiency story. I think it's gonna be great at optimizing a forecast. If you want to run a forecast once a week, heck, once a day, go for it. But you already know your target because you set your target strategically. So I think it's about running scenarios and have the mindset of these are screening for opportunities, screening for good things and bad things. And it has to be the human mind that does that. And sure, you won't be screening for the exact specific thing, but it's kind of these generic kind of containers, if you will, of scenarios. So you have, even in a very simplistic sense, right? You do corridor planning, which is, I think I'm going to get this expected case. What happens if we have a downside, and what happens if we have an upside? In reality, we're going to bump in between those corridors. That's a technique that gets used quite a lot. So no specific answer, obviously, to a specific event that you haven't forecasted. But you need to screen. You need to have a model or an environment that has the calibration to the level at which you can run those scenarios. A lot of times people will build a very detailed model and then want to run scenarios on it. It's like, well, it's too detailed. It's going to take you forever, no matter what technology you have. Sometimes it's super high level and there's very little driver-based logic there at all. Again, a challenge. So it's getting the calibration right that you can kind of get, at least get a corridor around the problem. I think that'll help out a lot, having that kind of mindset.
Right. Okay. And one more question to you, Evgeny. So you have mentioned 3 stages of planning: strategic, investment, and functional. Who is involved in each of these stages? So what types of people are involved from which functions?
Well, the strategic and investment phases, which are very well interconnected, because first of all, we find how basically our strategic growth map where we want to grow, and then how do we invest into resources so that we achieve growth in exactly those areas. So this is apart from FP&A, it's pretty much a top management exercise. So the global, the CEO, CFO type of stakeholders would be involved. And then, of course, when we have established those targets, and it's very important to be very clear what the growth map and the investments behind it are, because then we get an idea how they translate into functional priorities. And then we would involve really the functions, and from the function, depending on which function it is, of course, it's leader of the function, and usually a couple of more people with whom we develop the details, define the parameters of the dashboards.
Right, right. So basically the whole organization at different stages. All right, exactly. And last question coming to you, Chris. You've mentioned 2 states of the systems, as it is and the one to be. And in this to be state, future state, you still left some space for Excel. So what is an ideal world should be done in Excel in terms of planning?
That's a really good question, and I'm glad it was asked. Excel is still a fantastic tool. By no means does EPM eliminate the need for Excel, but in fact, what we want to replace is the incorrect use of Excel. Excel as a data repository, Excel as a planning tool. Excel is a very powerful user interface. It should be used as a user interface. It should be used for, some very manual ad hoc analyses, for example, from time to time to make a presentation or something else. So it's part of the Office suite when you want to do a presentation for someone. With, a lot of tools like Power BI or other EPM tools, for example, they have an Excel add-in. So within Excel, you can connect to a database and you can retrieve all of the data, all of the tables, all of the different things that you need. So you shouldn't be storing data within Excel. You shouldn't be using it as a standalone tool for budgeting and forecasting, but rather it should be used as a user interface to interact with the database, with data stored somewhere else, and then used as a data visualization ad hoc tool.
Right. Thank you for clarifying that. And what's left to me is say thank you to all of you for being here, for sharing your thoughts and presentations, for sharing your opinions, and for bringing calls to action to our audience. Thank you, my dear panelists, for being here tonight. Stay with me for a couple of more slides. I'm here to invite all of our audience to take part in this survey of this year's survey by FP&A Trends. So in handouts, please click on the link and it will take you 10 to 12 minutes. Besides that, I want to invite you to the 2 upcoming events. The first of all, FP&A Trends webinar, Transforming FP&A Process Through Advanced Analytics, or another FP&A board in Nordics on the topic from traditional to better and beyond budgeting. I will be very happy to meet you there. Thank you again to our sponsor of the event, to JEDOX, it's Modern Enterprise Performance Management. And let me invite all of the audience to connect with us. Choose the way that's working for you. FP&A Trends is available at many platforms. Before you leave, please spend not even less than a minute on very brief feedback. That's important for all of us to improve our events. Have a good day. Have a good rest of the week and hope to see you soon again. Bye-bye.